Hello, everyone, and welcome to our 5th installment of Aionics Fortnightly. I'm really excited about today's talk on why it is so difficult to commercialize new battery chemistries and what we can do about it. So we have our team here, as well as several members from the Echelon team joining us today, Carrie and Cody. So happy to have them with us for the discussion. And we'll just jump right in. So at the risk of sounding like a broken record from our previous conversations, battery innovation is so important to energy innovation generally. And that's why we do so much work in this space. It really touches, energy storage touches all different kinds of broader energy problems, whether that's electric vehicles or power on the grid or aviation or whatever it might be. So these innovations are really pretty important for a lot of reasons. And so that's really been our focus here at Aionics in a lot of ways. And so we want to see battery innovation thrive and do well. And this conversation is also very timely because as some of you may know, there was an IPO back in November of this company called QuantumScape, which was, I believe, the first IPO of a battery materials company in the US for, I want to say, probably 11 years. So these are pretty rare events, and they're really exciting for the industry when they do happen. And I want to give a special shout out to Stanford Material Science, which is where the QuantumScape basically spun out of. So that was a pretty cool, exciting moment for everyone over at Stanford. So this is a great success story. QuantumScape is a great company, great leadership, and of course, we want every battery company to be as successful as QuantumScape has been. And so the question becomes, how can we get more of these successes? And there's a really interesting paper, or kind of, I don't know if I'd necessarily call it a study, but kind of some commentary and really data-driven commentary on why this is such a significant challenge that I found in the literature. I think it's a great review. I would recommend everyone who's interested in this question to kind of check it out. So I put the reference here. Eve Hansen is the lead author, and my conversation here is basically just kind of sharing some of the findings from this paper. So if you want to learn more, this is the source. And so the title of the paper is Applying Insights from the Pharma Innovation Model to Battery Commercialization, Pros, Cons, and Pitfalls. So basically there's a survey of kind of how this works with batteries, why it's so difficult, and why, in comparison, the pharmaceutical model seems to be so much more successful, at least within the US. So I don't want to start, in kind of a negative way, but I think we are sort of tasked with the question first of why is this so difficult? So if we look at battery companies by the numbers, this is really interesting. So that plot on the left shows, I think there's been 36 companies, or at least that was, I shouldn't say 36 companies total, but in this particular study, they looked at 36 companies that had been founded after 2000. And as of 2017, you can see the distribution there in that pie chart of outcomes. So only 2 of those companies have returned investor capital back to their investors, and the rest of them have either ceased operations or are still kind of trying to commercialize, or have commercialized already. That's that dark gray, but still have kind of more work to do before they can start actually returning that investor capital. And because of that, the amount of investment that's going into materials, chemicals, and process related startups from the clean tech world has gone down accordingly. And so you can see there was a high there in 2005. Basically, all of the clean tech dollars were going into this space, and it's kind of slowly been either stagnating or going down. So it's maybe not too inspiring when you see those numbers, especially if you're an investor, thinking, well, that's, the outcomes don't look very good, so why am I going to put my money into it? So there's definitely improvements to be made. And now when you look at kind of how batteries have done over the last like few decades, really maybe 2 or 3 decades, we actually do see that there are a lot of improvements. So this plot here on the left shows that the energy density, so that's the energy you can fit in a given mass and a given volume, has gone up pretty significantly over the last several years. For context here, so our gravimetric energy density as of 2014 was around 300 watt hours per kilogram. The Department of Energy is really pushing and putting a lot of resources into getting that up to 500. And from my understanding, if you want to think about electric flight, you really got to get up to 1500. It doesn't really make sense until you get into the 1500 range. So that's, as you can see, I mean, that's like a 5x improvement over where things stood in 2014. So there's definitely a lot of improvements to be made, although you can see a lot of improvements, have already been made. And then cost has come down pretty significantly. So you see a big decrease in cost there. And for reference, so this data is a little bit old now at this point, but for reference, the kind of industry benchmark is you need cost at $100 per kilowatt hour before you can start thinking about electric vehicles being cost competitive with internal combustion cars. And we're actually getting quite close to that at this point. So this data is definitely a little bit outdated, but that is one success story over the last few years, is that we're getting close on that metric in particular. So generally, cost and performance are improving, but they're still falling short of what we need. So I think that just underscores the point of why do we care about this? Why do we need to try to understand and improve company outcomes? Well, it's because we still have a lot more work to do. So there's an interesting question of, well, why isn't this happening? Why isn't innovation keeping up with demand? And I think it comes down to kind of looking at how the market is structured. So most innovation is done by the large multinationals, of which you probably know, many of them, LG Chem, Samsung, they're Panasonic. They're mostly based in Asia. They're huge companies with lots of resources. And they're doing most of the innovation, but because of the way that their companies are structured, they typically are going to face pretty significant price pressures from their buyers and pressure for returns from their shareholders. And so those two factors usually combine to kind of encourage incremental progress over really like broad moonshot ideas. And then you look at the small companies, of which there are many in the US, many emerging in Asia and all over the world. And they have kind of higher risk tolerance, ability to really try these interesting, crazy ideas. But they're facing really steep price pressures. So they have to make things really cheap. And then in order to compete with everyone else, they got to be able to manufacture at huge scale. I mean, on the same scale as Panasonic. And if you're an early company, that's a pretty significant undertaking. And so that kind of puts you at a disadvantage against these incumbent companies. And then specifically for US companies, there's kind of an additional, potentially an additional headwind blowing against you, which is most manufacturing occurs in Asia. And so this can discourage private or public sector investment if there's a perception that, hey, we're going to figure out all of this kind of valuable IP, and then it's going to be manufactured in Asia, and we might lose control of that IP. So there can be a little bit of skittishness there as well about really investing a lot of money into this stuff. So there's kind of a tough industry dynamic there, and I think that's given rise to what I'm calling this sort of today's mentality, which is that if you're an entrepreneur, if you're a battery materials company, or battery materials entrepreneur, you need a really, really good idea. You need to be able to scale up that manufacturing to a huge degree, and you need to have cost competitiveness. Those are three really big asks. And if you're an investor, you're looking at the space and thinking, well, over the last 17 years, the average return on one invested dollar has been 16 cents. So 764 million invested and only 123 million returned. So it's a tough space. I mean, that's really what we're trying to communicate here. It's very tough. And I've heard this conventional wisdom several times from people, which is, hey, well, what does it take to bring a new breakthrough idea out of the lab and deploy it, into cars or into the, to sell it at the store, basically? Well, you got to be able to put in $1 billion, and you got to be able to wait 10 years. So that's kind of just the standard. of what people come to expect, and that's money. It's a lot of time, and it's a lot of money. So there's challenges, there's a lot of opportunity, and I think it's interesting to compare, and this is what I think the authors do a really great job of in this paper. It's super interesting to compare the industry to pharma. Now, pharma, in a lot of ways, is you might consider that kind of a more successful version of this system, where you have really innovative startups who are coming along, developing new ideas and new drugs, and typically are being acquired by these large manufacturing companies, and those drugs are scaled up very quickly and delivered to the market. This system has, I would say, kind of dialed in quite well. And it would be great to have the battery industry sort of mirror that approach. So if we look at pharmaceuticals for inspiration, we see a few things that are different. So one thing is that the margins on selling pharmaceuticals are much higher. So batteries are essentially commoditized at this point. So your returns are going to be like, your margins are going to be like 5%, and that's pretty low for anything, and especially low for a cash-starved startup, right? But for pharmaceuticals, if you get some innovative new drug on the market, you can get sometimes margins as high as 90% or higher. So there's huge potential there. There's also, probably correspondingly, there's more money invested in R&D for pharmaceutical companies. I think this is probably because, again, there's less commoditization, so there's more incentive to find that new breakthrough drug that can get you, significant improvements in revenue. And then for the time to manufacturing, it's fairly similar, but pharma actually can take longer than battery development. So interesting to kind of compare all these side by side. And when you look over here on the right, this is a plot showing the number of acquisitions of pharmaceutical startups, and according to their kind of phase, where they are in the phase 1, phase 2, phase 3 trial step. And you can see that basically at each of these steps, we're having acquisitions, and these acquisitions are in the hundreds of millions of dollars pretty regularly. And compare that to the battery industry, where you typically see acquisitions are quite rare, and they're kind of divided up into two classes. There's the IP acquisitions, which usually happen very early and are usually for less than $10 million. And then there tends to be the kind of later, more developed acquisitions, which are 50 million or more, probably not, pretty rare and probably not as high as these. So there's just kind of a industry is engaging with and taking advantage of the discoveries that are coming out of these startups much more effectively in the pharma world. So I just wanted to mention that there's really this thriving pharma startup ecosystem. Generally, there's 10x the venture investment that you see in the battery versus what you see in the battery industry. Regular acquisitions. I think just the question is why? Why is this so different? Going through the paper, I was able to distill out a few key points of difference between these two industries, and I just wanted to mention a few of them here. So IP protection is a big one, and I think the difference, one of the key differences here, is that battery manufacture is really a global enterprise, and protecting intellectual property across national boundaries can be quite challenging. Whereas a lot of pharma is done, at least from a US perspective, a lot of pharma is done within the US, it's done within kind of country to country. And so in the US in particular, you have very strong patent protections. You just don't quite get that in the battery world. And so in response, companies will typically rely on keeping things as trade secrets, or just kind of not telling anyone, or they'll try to contract with the manufacturer, and they can't really give the manufacturer enough knowledge on how to do it well, because they don't want to tell them all the secrets. So it's just like a really kind of opaque industry. So that's one thing. The second is margins, as I mentioned before. So these batteries are really just are kind of approaching commodities. not all batteries, I should mention it depends on the use case, but if you're looking at, let's say, electric vehicle batteries, that is or is becoming much more commoditized. Manufacturing is, when you're thinking about scaling up manufacturing for batteries, well, you got to be able to compete with these multinationals who are trying to manufacture basically the same product as you, or at least from the end user's perspective, a pretty similar product. Whereas if you found a novel drug and you need to manufacture that, well, you have a novel drug, there's really no one else that's creating exactly what you're creating. So that kind of comes back to this commoditization point. The speed for de-risking is, in batteries, as we know, it can be very slow because every change typically has to run through these month-long cycle tests. So you'll tweak the electrolyte and then you'll run the cells for months to see how those degrade over time. You kind of get that feedback and then tweak it again and then run it again. And so that can be fairly slow, and no amount of money in principle is going to help that process go any faster. No money can speed up time. So you're just kind of stuck there. Whereas these de-risking cycles in the pharma space can be much faster. And then finally, batteries are just complicated. I mean, you have at least, by definition, you have at least 3 components. You have two electrodes and an electrolyte. In practice, you have multiple more components that are added in there, additives and binders and salts and all kinds of things. Whereas with pharmaceuticals, you're just creating kind of a single molecule. And so your design space is much smaller. So keeping all that in mind, the authors identify 4 key issues that are really unique to batteries versus pharma and very difficult to crack. First is that venture capital is probably too expensive. And what this means is that if you're looking for a 5 or 10x or more return on battery innovations, you may just not get it because this is a commoditized space. Finding those huge returns is going to be very difficult. So that can introduce a lot of challenges. And secondly, manufacturing at scale is just really hard. It takes a lot of money, it takes a lot of know-how, a lot of expertise. Those things are kind of 2 things that we can't really do anything about, we as Aionics. But I was intrigued by these second 2 points. So one is that cycle life testing is slow and cannot be sped up in principle with more capital. And then the fourth one is that chemistry needs to be de-risked. So I should say innovations with new chemistries should be de-risked as early and as often as possible. And if you look at some of these companies, you'll see that those de-risking steps often get pushed out to too late in the development of the company. And so you've already raised $100 million and your investors are really expecting now that 5 to 10x return. But you still have these fundamental questions about chemistry that are still there. And so these 2 points in particular, I think are things that we at Aionics and the kind of scientific community generally can do something about because these come down to data. Predicting cycle life can be done more effectively with good data. So you can't speed up time, but you can kind of get better indicators of cycle performance earlier with data. And then of course, de-risking of chemistry, exploring new spaces, quantifying materials. This can all be done with data as well. And so I think the question to ask is, well, are you learning from every single data point that you generate? Whether cycle test, whether that's a materials performance point. These 2 questions in particular are super important, and they're questions that we can do something about. So data is really important there. And what you do with that data is, well, there are for cycle life testing, we talk about the cycle life prediction models a lot. And these models are, as far as I know, as far as we can see, are pretty good. So they're like the ones developed by Will Chu and colleagues at Stanford that can predict within the first few cycles how long the battery is going to last over the long run. So maybe within 5 or 10, you can say, okay, this will last for 150 cycles or 200 cycles. And if you do a test and you say this one's only going to last for 30 cycles, well, now we know that electrolyte should be modified and we don't need to wait several weeks for that to be done. and then again, for chemistry, de-risking of chemistry, materials informatics models this is exactly what they do. So they can extract insights from extremely small data sets. We often work with data sets in this kind of tens of data points. And not only can they help us to understand what's actually going on in these systems, but also can help design that risk versus reward calculus. So you got to get to this spec. Do you invest in the moonshot, or do you invest in the incremental performance, or how do you balance those two? That's often kind of a qualitative question, but with a data-driven approach, you can make it very quantitative. And these are this is where I start to get into the advertisement part of the presentation. So I try to minimize that, but these are things that we have worked on here at Aionics, and I have another advertisement slide after this one. But I just wanted to sort of sum up what I think are the key recommendations for companies. Really lie along these axes of business and technical recommendations. So on the business side, establishing customer partnerships early and testing cells in the field, basically getting that user feedback as quickly as possible, will help to set priorities in the development of your materials and kind of help with the de-risking. Non-dilutive capital, meaning money that does not have kind of venture expectations behind it, is sort of, I think, what will definitely help, or at least that's what the authors are proposing. And then focusing on high margin beachhead markets first as a battery manufacturer, things where maybe the market's too small for these big manufacturers to get in on, but you can get in there and you can get high margins and you can get revenue first and kind of get the company rolling that way. So those are the recommendations on the business side. Basically, how do you operate in the space and kind of commoditized? And then on the technical side, I think the recommendations really boil down to develop a comprehensive data strategy to accelerate R&D, and then strike a careful balance between risk and reward. And as a startup, that's, I think, really you're in a uniquely powerful position to be able to out-innovate the competition. And that's really how startups thrive is by taking those risks that the bigger companies may not be able to take. So, okay, here's my advertisement slide. So for companies interested in this, I won't say too much aside from this is really the space that we're operating in, that we're really interested in, is how to use data to do these things and to help you de-risk and help you accelerate your development. So if you're interested in any of these points, please talk to us. We'd love to talk to you. We'd love to think about these sorts of things. I think it's just such an interesting space. It's such a difficult space, but one that's really important. And so I think it is important that we kind of figure out how to get this right. There's pretty significant business challenges and technical challenges. Some of those are beyond our ability as a company. We can't do much about the expectations of venture capital, but really a big part of this problem is just that materials innovation is really hard. And so anything that can improve the efficiency of innovating and bringing new materials to market, I think will kind of just make everything else a little bit easier, or at least that's our hope. So, that's a quick dive on this paper. Again, I recommend anyone to check it out if you're interested in learning more. And I will see if anyone has any thoughts, any reflections, any ideas. Anything that struck you?
There's one question that I have. As far as I understand, the pharma world was able to embrace data-driven approaches a few years back, right? I mean, what stopped the battery world to embrace it? I mean, we're still in that phase where it's more like people are skeptical and we're still getting into it.
That's a really good question. And I've kind of been wondering that myself and haven't really been able to get a good answer. I think it is kind of curious. I think even like in the 90s, you were seeing the pharma industry utilizing what they were calling cheminformatics, which we would call materials informatics, quite successfully. There's been a number of really of successful examples of data-driven approaches have helped discover new drugs. I don't really know why it didn't really percolate into materials. I think potentially extracting these fingerprints of solid crystalline materials may just be more challenging than doing it for molecules. That maybe the structure property relationships aren't quite as clear. And I think maybe also part of it's like just a cultural thing. Like these approaches just didn't quite bleed over from the pharma world into the materials space. But I don't know. I would love to know the answer to that question. It's not really totally clear to me.
Yeah.
Austin, how do you feel the government intervention or assistance in the batteries arena will affect your future as it has in pharma, as you've seen with the vaccine for COVID and kind of a general trend towards climate-friendly solutions?
Yeah, so there were several recommendations in this paper which I kind of left out on sort of what can policymakers do, and I think one of the biggest things is basically offering more government support for research, whether that's at the university level or at the the startup sort of SBIR type level. That non-dilutive financing, as they mentioned here, I think is it's easy to say that free money is nice, but I think in this space it's particularly nice because there's huge strategic importance, but maybe just not quite the the payoff that the private sector needs to see to really invest a lot of money into it. I think also the aside from investment, public sector investment, I think the government can also do a lot in terms of establishing standards. And I think like the DOE has done a great job of kind of benchmarking various levels of performance and trying to encourage sort of transparency around those benchmarks and getting everyone to sort of agree on what's important. And okay, you can report this value, but you have to report it after cycling the battery this many times, and just kind of get everyone speaking the same language. I think that's a big problem because of these concerns around IP and everything's just so opaque. That might be another area where government support could be helpful. But I think a lot of it comes down to money. There's so much de-risking that needs to be done, and that kind of support can be really valuable. That's a good question. So Lenson, I was thinking when Sahil asked the question, I was thinking about your work on featurizing molecules that you were working on at Stanford. And I'm curious, from what I remember from that time, I think we were seeing a lot more kind of wisdom and descriptors and models present in the literature for molecular-based materials rather than solid materials. I think a lot of that came from the kind of pharma industry. Do you have any thoughts or reflections on kind of like the infrastructure and the knowledge out there for handling molecules versus handling inorganic crystalline solid materials?
I'm not an authority, but what you said is accurate. I think a lot of the libraries we relied on originated from pharmaceutical research.
That's kind of the impression that I got. Well, thank you all for the discussion. Great to see you here, and it's always fun to discuss. Thanks to those of you who are listening after the fact, and we will see you next time at the next Aionics Fortnightly. Thanks, everyone.
Thanks. Bye.